Welcome back to another analysis on FTM. So if you're new to the channel, every day I go over crypto charts, specifically FTM, Matic, Chainlink, and any others that you guys may suggest. Just leave the suggestions in the comments and I'll do it for you guys. So enough talking, let's get into the video. Disclaimer, this is not investment advice, this is not financial advice. This is just for educational purposes only. This is what I see on the markets. So from my last video on FTM, which was yesterday on January 16th, Sunday, I mentioned that FTM had broke above this strong resistance. And to confirm the break above the resistance, we needed to see another bullish close above the level. And I also said if we was to get a bearish closure below the level, that means this is a tested area, not a broken area. And as you can see, the latter scenario played out, right? Now, from previous occasions when this scenario occurred, we had a sharp decline, right? And you can see right here where I have it circled over here, right? Another incident happened here. We came down, but we tested it once again, and then we fall, right? That may occur here. Anything can happen. A retracement here would make sense because we've had this nice impulsive push, and a healthy trend usually has, the market doesn't go up in straight lines. It moves in wave-like formations, aka higher highs and higher lows, right? This is a higher high, and this would be a higher low, right? So don't panic. Don't panic. And if anything, if you weren't able to catch the initial push, you should be licking your lips now at this opportunity, because when price finds support, if price finds support, I should say, it would give you the opportunity to get into the upward movement or align yourself with the uptrend. Okay, so yeah, like I said, this bearish engulfing candle of these two previous bullish daily closes just basically says that price hasn't successfully broken above the resistance, and this area will now be classified as tested resistance. Okay, now what do we look for now? Let's drop on the lower time frames, aka zoom in, to see what the candles are telling us. So let's go to the 12-hour time frame. Not enough zooming in, so we drop to the 4-hour. Okay, right off the bat we can see that price is at, you can almost say this is like a minor support, simply because price has found support here before and bounced, right? Or you can say we're at the bottom range, the bottom level of this previous consolidation range, right? Now price could bounce from here, no lie, price could bounce from here. We just have to wait and see, right? But if it doesn't, if price does break below here, we could be in for quote unquote a deep retracement or a deeper retracement, right? And the only reason I would say that is because of all of this clean traffic, right here to the left, right? You know the old saying, look left, structure leaves clues, okay? And to the left, you see this clean traffic, right? Now, what does clean traffic mean? Clean traffic just means that there isn't any, there isn't any impediment or speed bump, or aka support and resistance, that price could come to and have some trouble blocking the direction that it's flowing in. Okay, so yeah, like I said, if price was to break below here, then we could see some play in here, or it can come back up, to be honest, right? Because Fantom is an appreciating asset, right? So in the long run, we expect it to appreciate, aka continue upward. So yeah, if we break below this level, the next area I would probably look for that could possibly find support is around my EMA level, right? Simply because EMAs sometimes acts as dynamic support and dynamic resistance. Okay, but if we break below that, then we could be in for a deep retracement. and then we would have to, yeah. So right now, if you are a day trader, I would still kind of sit on my hands because it's in a tricky area. Okay, this is in a, it's in a very tricky area, in my opinion, because it could break below here and go down, or it could fake you out, come down, and then break back above here and then continue upwards. You feel me? So, reason I say I would wait on my hands, or the only trading opportunities that I would take if you are looking for a sell, which would be a short-term sell bias, in my opinion, it would be after a break below this minor support, and then it retraces and finds it retraces and then finds some sort of resistance, and then I would then take a trade from here to the downside. If this scenario plays out, the next my TP would be around here at this level right here. So it would look something like this. You know, something like that, right? If you're looking for the upside move, if you're bullish and you're looking for, if you're just waiting for only bullish moves to occur, you could wait for price to break above here and then find support again, and then getting off of an entry around here, or off of, you can get in after price has shown you or given you signs that it has found support and is ready to continue upwards. Okay, it doesn't even have to be like the most textbook retest or retracement, just some sort of signal showing you that it's just bullish and it's giving you, it wants to continue upwards. Me personally, I'm not going to touch it. I'm just going to wait and see what happens. Okay, I don't like what's happening. Price could literally just range here for a while and then go up, or range here and then drop, right? And to be fair, on the 12-hour, it's on the daily. If you're looking just at the daily and following daily momentum, this can easily push. This doesn't even really count as support. You know, it's like a very minor support. If you're not sure in what you're seeing on the lower time frame and the higher time frame, let's say the higher time frame is showing you something very different than what the lower time frame is showing you, it tends it usually it is usually better to go with what the higher time frame is showing you, because it's the higher time frame shows the overall price action, whereas lower time frame just shows minor trends, right, within the overall trend, which is the higher time frame trend or direction. Okay, now you could make some money playing the lower time frames, to be honest, and this is what scalpers do, right? But understand that the move that you're seeing, especially if it's clear we're in a bullish trend right now. So let's say you see a bearish move in the lower time frame. It's not to say it wouldn't be profitable, right? But it's a bit sketch, because since the overall direction is bullish in an FTM case right now, anything can just pop up and then we could just see a big spike to the upside, right? Because that's the overall direction. So when you start counter trending, you're kind of playing with fire, because you don't know how long that counter trend can last. And so it's more risky than just aligning yourself with the overall market direction. So yeah, see you guys tomorrow.